Here we go now in crude oil, and you see while I made the last video, the market dropped over $2 down, exactly what I said. But especially about my trading system, we see here the red line above the prices. It's not a moving average, is a created and programmed momentum indicator that is combined with the moving average, and it is serving and working as sell and buy signals. Each time red, you immediately go short. And we see here, for example, if you have green, then the market is rising. So now we are at the 2 hour chart, and we see exactly the market is going down. I'm going now for other trading friends to shorter periods. We see half an hour. The market was rising and now breaking. See here, but we had a short selling at 74.63, a taking profit at around 69. The market came up, and now currently in half an hour, 30 minutes is long, but we're trading only in correlation with shorter time frame. And we see here in 10 minutes exactly, we have a clear trend. The market is going now at 70.90. You know how fast it's falling. So make it a little bit bigger. So we see here very nice trends, right? We had at around 68.24 a buy signal, for example, as the market told us to sell immediately at 72.81 and going short. And you see what happened. The market came a little bit up, bull trap, bull trap, bull trap, bull trap, another bull trap, and a break of the high. Now a lot of retail traders went long, but the market is red. The momentum is red. The market falling down, 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 and down again. And we are now at 71.02. So, and why is this happening? Well, because the good Fed Kashkari around 28 minutes ago said inflation is still above the target, meaning no interest rates cutting this year, as many traders hoped yesterday, meaning that possibly in January and February of 2024, also the expected interest rate cuts will be vanished. And for some friends, they asked me, yes, but we had also last year, and during the last year's also inflation, what is the correlation and relationship between oil prices and inflation? With other words, is high US inflation good or bad for crude oil, right? So no one was naive enough to expect that an agreement on the US debt ceiling yesterday, when US President Joe Biden met Kevin McCarthy, and US treasuries remain under a descent selling pressure, especially at the short end of the yield curve, as investors dump US short-term papers due to the rising US default risk. Gold gained, and if you go on my TradingView page, I told you it's going higher. What happened? It's going higher. Exactly what I told you. I told you oil's coming down. What happened? Oil came down, and what's going on now? Oil coming more down. And we need first of all to understand that crude oil is a major economic input. So a rise in oil prices contributes to inflation, which measures to or the overall rate of price increases across economy. It is a measure, right? So we take this commodity as a measure. If the prices of this commodity is going up, we can suggest that inflation will go higher, and so on. And inflation, as measured by the annual gain in the US Consumer Price Index, CPI, set a 40-year high in March 2022 amid COVID-19 supply disruptions in 2020, and crude oil prices were the highest in a decade. Also, as the US and its allies imposed sanctions on Russia during to its invasion of Ukraine. So we had rising oil prices in periods where inflation has been down, and we had also rising and very sharply falling prices of the crude oil in high inflationary times. So what can we learn now of these scenarios? One is, for example, that higher oil prices contribute to inflation directly and by increasing the cost of inputs, for example, right? There was a strong correlation between inflation and oil prices in the 70s, right? During the 1970s. And we had also situations like oil's potential to stoke inflation has declined as the US economy has become less dependent on it. But the oil prices have been down, and then we had a sharp rise. And we had also situations like oil prices exert a greater influence on producer prices because of oil's role as a key input. So some argue that costly renewable energy could strengthen the correlation between energy costs and higher inflation rates, right? And on the same time, we can see that crude oil was a bigger contributor to inflation in the 1970s when it was used much more intensively per unit of economic output. And back then, the US economy consumed more than a barrel of crude per $1 of gross domestic products. We had in 2020 also the lowest price of oil going to around $12 and also falling much more deeper. So is the inflation now good or bad for oil prices? It depends on the time frame. In the short time frame or in the short term, higher inflation tends to lead the higher or to lead to higher oil prices short term, right? In the longer term, if the Federal Reserve raises interest rates and slows economic growth to control inflation, oil prices could also decline as a result. And what type of inflation would be triggered, for example, by an increase in oil prices? Oil prices have historically had a greater impact on the producer price index, more impact on PPI than on consumer price index, on CPI. So PPI measures the price of goods at the wholesale level. So to me, for example, one of the major factors is, and we had today the US dollar PPI, today 11th May of 2023, expected was plus 0.3% and is coming down. PPI 0.2%. The unemployment claims at 264,000. So around 19,000 more, right? And we have also the data as the US prelim consumer sentiments on Friday and also inflation expectations. So now back, it might be also interesting to know what other factors can cause oil prices to rise. In addition to the demand, for example, for oil to produce, and we say now, go now to a shorter time frame to see what the market is doing here. So I'm seeing now also in all time frames we are short here. Well, the demand for oil to produce a host of products plus its use by the transportation industry. Other factors that can cause oil prices to rise include also geopolitical tensions, tight supply, growing economic strength. And we have also such situations. For example, in Middle East, Asia, in Iran, in Turkey, in some other regions, in Africa, for example. So while the prices or the price of oil now historically has correlated with inflation, that relationship has become now less pronounced since the 1970s because the loosening of this correlation is likely a result of the growth of the service sector, which uses energy less intensively than manufacturing. And also the technology is now providing much more and offering much more possibilities. Renewable energies, for example, technologies, and so on. And we have a different time. So since oil is a key input in manufacturing and a major cost factor in shipping, or oil prices have tended to have a greater effect on the cost of goods than services, which also explains the relatively weak correlation between oil and consumer price index, oil and CPI, okay? And the strong on the of the oil between crude and PPI. So look closely more to PPI and then to the CPI because a lot of traders do it the other way. So to me personally, PPI is much more important, right? So the producer's price index, right? Because the link between oil prices and consumer prices could not be or isn't, cannot be stronger. So economies are reducing their dependency on oil. In the early 1970s, when oil, for example, was cheap, there was no reason not to drive a big gas guzzler, which went through a lot of gas or petrol. So since the 1970s, engines have become more fuel efficient, and we have seen the rise of alternatives forms of energy. And this is the reason that oil prices are an important factor in determining inflation. And a very significant rise in oil prices will feed, for example, through into higher inflation. However, there are many other factors affecting inflation apart from oil, notably wage growth, confidence, spare capacity in the economy, rate of growth, and therefore, even if oil prices rise, it might be outweighed by other factors, right? So, what you can do now is to analyze the market, but better, you can go to my trading view, DaveBrascoFx. So, and there you can find now a lot of trading ideas and explanations and the updates. So, and there you are. You see all the factors. You can read them. You can walk through, and and don't forget. Remember to follow me on TradingView. Why? Because it's easy for you. Every update, you get a new news or lamp news and automatically. So you are always updated, right? So you don't need to be worried what's happening on the market, why is the price rising, and should I sell or should I buy? No, we are here to help you. So go to this page, you see here Airbnb, stock market, FX, currencies. So Ethereum, we are also in cryptos, indices, everything. We got everything here. So go to this page, follow me, and I hope you will go every day to make good trades. All right. Have a good day. Have a lucky, funny, and successful trading days, friends.